If you're anything like me, you're a dividend investor with the hopes and dreams of someday allowing your dividend payouts to cover all of your bills plus more. And although most stocks and ETFs do pay a relatively small dividend yield, which means you're going to have to spend a lot more money on shares in order to reach that goal faster, there are certain stocks and ETFs in the stock market that do offer a much higher yield, one of them being the ETF Jepi. Jepi ETF is also known as a JP Morgan Equity Premium Income ETF. It's an ETF that aims to provide investors like myself with a higher level of income and hopefully capital appreciation on top of that. The fund has an income generating strategy. It seeks to generate income and enhance total return potential through exposure to the broad range of equity and income generating securities. The fund has a mix of US and international equities, as well as fixed income securities, such as things like bonds, preferred stocks, and other high income generating instruments. But on top of that, Jepi does also employ an options overlay strategy, which involves selling option contracts on a portion of the fund's overall holdings to generate additional income for the investors. Now, this strategy not only provides more income for the investors and for the fund, but also potentially provides downside protection to the fund's equity holdings. I personally own over 1,000 shares of Jepi right now, which I've been accumulating over the past years. And because of owning these shares of Jepi, I was paid today hundreds of dollars, somewhere around $300 to $500, and I'll post a screenshot from a few of my portfolios on the screen here. Now, even though Jepi does have a trailing 12-month dividend yield of somewhere around 11.7 or 11.8%, there are still some things to be concerned about when investing into this JP Morgan fund. One of the things to sort of be concerned about when it comes to Jepi is that the dividend has been shrinking over the past several months. You see, when Jepi employs a strategy, it doesn't necessarily mean that the shareholders are going to get the same exact dividend distribution every single month. There's been months where Jepi's paid over 50 cents per share per month, and there's been months like this last where Jepi pays around 40 cents per share, which is a significant difference, especially when you're holding on to hundreds or thousands of shares of this fund. Also, if you're going to be buying this fund and hopefully using the income to retire off of, you're going to want to make sure that the fund has a track record of paying out a dividend that's going to fulfill your income needs. Another thing to be concerned of when investing into any high-yielding stock or ETF is going to be the total return. The total return equals price plus dividend, and a lot of high-yielding funds or stocks don't have that great of a total return, because a lot of high-yielding stocks and funds historically do experience substantial price decay. Where Jepi, on the other hand, at least over the past 5 years, and this fund is not even 5 years old yet, keep in mind, it has returned a total return of around 40.49%, pretty close to the S&P 500 62.46. So even though the shareholders of Jepi have not necessarily saw the same exact total return as those that just bought into the S&P 500, they were paid out income on a monthly basis, which for certain investors and certain strategies and situations might be the better offer. So is Jepi the best high-yielding income ETF in my opinion? The JP Morgan Equity Premium Income ETF Jepi is definitely up there in the ranks with the top of the top. Not only does Jepi have a high monthly consistent payout that might match very well with certain investor strategies, but also so far since inception of Jepi, the fund's total return has not decayed nearly as much as I would have guessed it had, and it's performed very well, relatively speaking. If you enjoyed this video and you want to see more videos like this, make sure to please drop a like in the video and also subscribe to the channel for more. Thanks again for stopping by, and I'll see you in the next one.